Welcome back to Investing Talk Podcast, everybody. Got a really interesting one for you today. We're going to be talking about Vestis Corporation.
Oh, yeah.
Ticker symbol VSTS.
Yeah, they've been making some news lately.
Yeah, they have. Their Q1 2025 earnings report. Let's just say
It wasn't great.
it wasn't a slam dunk. No, not at all.
But I think, we should really
Groups-
look at what's going on.
Yeah, before anyone jumps ship.
Right,
Got
exactly.
to look beyond the headline.
Of course, as investors.
Yeah.
We should
The smart investors.
always do that.
Exactly. So take us through these earnings. Like, what were the big, attention-grabbing numbers here?
Well, I think the one that everyone's kind of latched onto is that earnings per share was only 14 cents. And that was
14 cents. That's it.
Yeah, that's it. And
Pretty low.
yeah, and that's a 36.36% miss
Oh, wow.
compared to what analysts were expecting, which was 22 cents.
Okay, so a big miss on the earnings per share.
Right. And then on top of
Now
that,
there's more.
yeah, revenue also missed projections. It came in at $684 million, and they were expecting $724.72 million.
Okay, so a miss on earnings per share and a miss on revenue.
Yeah, 5.61% miss on the revenue.
Oh, so not insignificant. Now,
Yeah.
I know that, a lot of our listeners are, really savvy investors.
Yeah.
But some people might not be, Wall Street experts.
Sure.
Can you just break down for us, what does it actually mean for the average investor when you have misses on, both those fronts?
Well, I think it makes people nervous because they wonder, if the company can't meet those projections, what else are they missing?
Right.
Are there deeper problems?
Yeah. Are they just not good at what they do?
Right. Or are they just not telling us the whole story?
Yeah.
So it can be a little bit worrisome.
Okay. So not great news. But, I'm seeing here that they did put out some other communications that maybe paint a rosier picture. What do they say?
Yeah, they're actually still holding firm on their full year guidance.
Okay. So they're saying.
Look,
You see?
we know we missed this quarter, but for the whole year, we still think
Sure,
we're
yeah.
hit revenue of $2.8 to $2.83 billion. And then the adjusted EBITDA is going to be $345 to $360 million.
Okay. So they're saying those are still on target.
Yeah, still on target. We're still projecting 3% to 4% top line growth.
Okay.
And we think EBITDA growth could even surpass 10% in the latter half of the fiscal year.
Really?
Yeah.
Interesting.
So they're feeling optimistic about the future.
Okay. So we've got, this miss in Q1, but we've got them, feeling pretty good about the future.
Mhm.
What do you think? Are they just whistling past the graveyard, or could there be some solid ground for this optimism?
Well, I think it's important to look at, what they're doing. So
Mhm.
CEO Kim Scott actually has said he's very confident about potential future volume increases,
Okay.
particularly in the healthcare
Okay.
and industrial sectors.
So two big sectors for them to really be optimistic about.
Yeah, absolutely. They're also making changes to try to improve logistics
Okay.
and make the customer experience better.
I think that's, a lot of companies will talk about customer experience,
Right.
but focusing on logistics, that's
Yeah, especially
Yeah.
in this market.
that's smart. Yeah,
That's really important.
absolutely.
Yeah.
And they've also been making some changes to their management team, right?
They have. They have new people in the CFO and the chief legal officer positions.
So that's interesting. Brand new people,
Yeah. And that, that could,
brand new perspectives.
new perspectives.
Yeah, new blood.
Yeah.
Yeah, so maybe that's a good thing. I also see that they went ahead and paid back $20 million of their term loan debt.
Yes. That's a good sign, I think.
What do you think they're trying to signal there?
Well, I think they're trying to say, look, we're financially stable.
Yeah.
We might have missed this quarter.
Yep.
But we're solid. Yeah.
They're in it for the long haul.
Right. We're being responsible.
Yeah.
And we're managing our debt.
Okay. All right. So we've got this mix of, the earnings miss, but also these positive projections and actions. Let's turn our attention now to the technical analysis of VSTS. What's the stock doing right now?
So right now, the stock is actually trading at $15.97.
Okay.
Which is, it's recovered a little bit from
That initial drop.
that big drop after the earnings were announced.
Yeah.
But the technical indicators are a little bit,
Oh, what are they saying?
they're a little mixed.
Mixed signals.
Yeah.
Well, that's never fun.
No, not easy to interpret. So for example,
Okay.
the stock is trading above its 200-day simple moving average.
Which is a good sign.
Yeah, which is usually a good sign.
Yeah.
That's at $14.42 right now.
Okay.
But The MAS CD
Yeah.
is giving us some,
Man CD.
which measures momentum.
For those who don't know Mass CD, can you just quickly define that?
Sure. So the moving average convergence divergence,
Okay.
it basically tells us, is the price trend getting stronger
Okay.
or is it weakening?
Okay, so that's the momentum.
Yeah, and right now it's actually suggesting bearish momentum.
Bearish.
Yeah.
So that's not a great sign.
No, it means the decline could keep going.
So we've got like a good sign with the moving average and a not so good sign with Mass CD.
Right.
What else are we looking at?
So the RSI, the relative strength index,
Yeah.
is at 26.8,
Right.
which actually suggests the stock might be oversold.
Oversold, meaning.
It means it could be due for a bounce back,
Okay.
but it's not a guarantee.
Okay.
Because VSTS is also trading below the upper Bollinger Band.
Okay, and what does that tell us?
And that could indicate,
Continued downward pressure.
more downward pressure.
So let me get this straight. We've got the 200-day moving average saying bullish.
Right.
We've got the Mass CD saying bearish.
Yeah.
And we've got the RSI saying oversold.
So
It's a tug of war. It's a real tug of war.
it is.
So what do we make of this? How do we interpret all this?
Well, I think we have to be a little bit cautious here.
Okay.
We can't just say, oh, it's oversold, it's going to bounce back.
Right.
Because that Mass CD
Is
is,
worrisome.
yeah, it's a little worrisome. So
So for our listeners out there who are, thinking about VSTS,
yeah.
maybe thinking about putting it into their portfolio,
Yeah.
what are some things that they should be looking at?
Well, I think the most important thing is to see how the company does in the next few quarters.
Yeah.
Are they going to meet those revenue targets? Are they going to hit that EBITDA?
So basically, are they going to do what they said they were going to do?
Right. Exactly.
And or
Or-
shut up time.
Yeah, and are those operational improvements
Right.
actually going to translate into
Yeah.
real results?
Okay.
And are they actually seeing
Yeah.
those volume increases
In those sectors.
in healthcare and industrial that they're hoping for?
Yeah. So, watch closely, see if they can actually make
Yeah.
good.
Yeah, walk the walk.
Yeah, exactly.
Yeah. And then I think investors also need to think about their own risk tolerance.
Sure.
Vestis might grow.
Yeah.
But there's also a chance that it won't.
Yeah.
So how much risk are you comfortable with?
Yeah.
And I think it's important to remember,
Yeah.
this is not financial advice.
No.
We are not financial advisors.
It's
It's just
ju-
for entertainment,
Yeah, we're just
informational purposes.
exactly.
And, we always say this, you got to do your own research.
Yes, absolutely.
We can't.
Don't just take our word for it.
No. Do your own homework.
Read those earnings reports. Really dig in there. If you need to talk to a financial advisor,
Right.
you should do that.
Absolutely.
All right, so we've talked about the earnings miss. We've talked about these projections. We've talked about technical analysis. We've talked about doing your research and your risk tolerance.
Right.
One thing we haven't talked about is investor sentiment.
Oh, yeah. That's a good point.
What's the general feeling about Vestis right now?
Well, it's kind of all over the place, to be honest.
Oh, really?
Yeah. You've got some analysts who are still pretty bullish.
Okay.
They say, long-term Vestis is in a good position.
Okay.
They've got that market share.
Yeah.
And there's potential for growth, especially in those new sectors we talked about.
Right.
But then you have other analysts who are more cautious.
Okay, so there's some bears out there.
Yeah, they're like, wait a minute, they missed earnings, and there's a lot of competition out there.
Sure. So it's not a slam dunk.
No, it's not an easy call.
No, it's not clear cut.
Right.
So again, even more reason to, do your research, get informed.
Yes, absolutely. Don't just follow the herd.
Yeah. Now, we always like to look ahead. What's on the horizon?
Yeah.
What are some of those, emerging technologies or trends that could really have an impact
Right.
on a company like Vestis?
Well, a couple things come to mind.
Okay.
I mean, you can't ignore automation.
Yep.
And
Yeah, that's changing everything.
it's huge. It's changing everything.
Yeah.
And Vestis is going to have to figure out
Yeah.
how to adapt.
To stay competitive.
Yeah, if they want to stay competitive.
Absolutely.
And then the other big thing is sustainability.
Sustainability.
Yeah.
What do you mean by that?
So, environmental,
Okay, so.
social governance, all that stuff.
Oh, ESG.
Yeah, ESG.
Okay.
That's becoming more and more important
To investors?
to investors, to consumers.
So companies need to be thinking about that.
Yeah, they need to show that they're doing things the right way.
Okay.
If they want to attract investors and customers.
So these are things that Vestis is going to have to really pay attention to.
Yes, absolutely.
If they want to be successful
If they want to thrive
going forward.
with that.
Okay. All right. So we've we've covered a lot. Earnings, projections, technical analysis, even these bigger trends, for our listeners out there who are, maybe thinking about Vestis.
Yeah.
What's your big takeaway for them?
I would say it's complicated.
Okay.
It's not an easy decision.
It's not black and white.
No. There are good things.
Yeah.
There are some warning signs.
So it really comes down to doing your homework, weighing those risks and those opportunities.
Right.
And, making the decision that you feel comfortable with.
Yeah, that's the most important thing.
Okay.
Don't invest in something if you
Not
don't.
uncomfortable with the level of risk.
Right. Or if you don't understand it.
Right.
Do your research.
Yeah.
Make sure it aligns with your goals.
Absolutely. Okay. Any last words of wisdom?
Well, hey,
for those who are thinking about VSTS?
Don't write them off just because of that one bad quarter. I mean, they're doing things.
Yeah.
They're addressing the challenges.
Yeah.
And they do have those potential growth areas.
Right.
But don't get caught up in the hype.
Don't just blindly buy in.
Yeah.
Okay.
Look at everything.
Look at all the factors.
Make an informed decision.
Great advice.
Yeah.
All right. Well, that's our deep dive.
Yeah, that was a good one.
Into Vestis Corporation. Really interesting company.
Yeah, it is.
Lots to consider there.
A lot going on.
This is just the beginning of the conversation.
Right.
We always want to hear from you.
We do.
Our listeners.
Our listeners are the best.
So head over to our website.
Yeah.
Social media,
Leave us a comment.
Let us know what you think about Vestis.
What are your thoughts?
Yeah. Are you bullish? Are you bearish?
Are you staying away?
Yeah. What do you watch? What are the factors that are most important to you?
Yeah, we really want to know.
We do. We love hearing from you guys. And, if you enjoyed this episode, please subscribe to Investing Talk Podcast.
Yes, don't miss out.
So you don't miss any of our future deep dives.
We've got some great ones coming up.
We do.
We're going to be talking about some really interesting companies.
We've got a great lineup.
So subscribe and stay tuned.
We're here to help you guys.
We are.
Stay informed, make those smart investment decisions.
That's right.
And thanks for tuning in to Investing Talk Podcast.
See you next time.
And, of course, if you liked what you heard today, please subscribe to Investing Talk Podcast.
And tell your friends.
Yeah, tell everyone you know.
Share it.
Spread the word. We appreciate all the support.
We do. We love our listeners.
And we'll see you next time.
On the next episode of Investing Talk Podcast.